Welcome back to the Financial Shepherd Podcast. My name is Joshua Casey Garland, certified financial planning professional, founder and CEO of Shepherd Wealth Management. Very excited to be back in home studios here today to deliver today's podcast, Thursday, March 12th, after Fed Day. A lot to talk about here today. Ez is in studio, which is why you're not seeing him kind of in the upper, left corner, I think, of our usual virtual kind of collaboration here with the podcast. Yeah. So welcome back in studio, Ez. Off camera though, so that's kind of
off camera, like the old days.
Yeah,
the old days. We have turned the distance between us from miles to mere inches today. So,
well, we're going to need it because we got a lot to cover, and we're going to get right to it here today. I'm going to skip over some investor questions, not because I don't want to address them, but I think those questions are better suited for our next podcast. Which will be during the first week of April, most likely, before we get to tax time. So I want to save those because I do think they're really good questions. I want to get to them and give you guys a thorough response. But I could not help myself this morning because as we're setting up this show, we get some news, like literal live news here. Department of Justice in 16 states are filing an antitrust suit against Apple. So,
all right,
want to kick this around a little bit for the audience because you guys are probably all at work right now, or maybe dropping kids off at school or whatever it is that you guys are out there doing. And we certainly appreciate you watching the show. We really enjoy doing this. The main reason why we do it is because the news does a good job of hitting you with these headlines. They do a pretty bad job of providing some historical context to it, and really that's what we're all about here.
Yeah.
The main reason why we like to get into the historical context of all the news is because there's always been a precedent, right? For whatever it is that the headline news risk is, geopolitical, political, company-specific, whatever the risk is, there's always or almost always been a historical precedent. The only thing I can think of is the actual pandemic that shut down the whole global economy. I can't give you a comparison to that, but everything else that's generally a risk in the market or a headline risk in the news, there's always been some precedents behind it. And once we understand what precedents are, well, that's how human beings behaved in the past under similar circumstances. And the one thing we know about humans is that we haven't changed all that much, which makes us very predictable. And of course, past performance is no guarantee of future results. Investing involves risk, including risk of loss. But Buffett talks about the one thing that we know for sure about human beings that they don't learn from history. And he also talks about the main reason that individual investors don't achieve the consistent performance they're looking for is they can't control their temperament of their emotions as it relates to these headline risks that they see on their phone or in emails or on the internet. And the best way for us to get control over our emotions and temperament, because we're humans, we see the same things that you guys do. It is concerning that you got the Department of Justice in 16 states suing Apple, but there's a precedent for that too. And we're going to talk about that today as well. But once I understand how humans have behaved, I can now put the probabilities in my favor. There's no guarantee, like I said, that the past performance will guarantee a future result. But at least you understand what the probabilities are. You understand how other humans reacted and what the performance was of those stocks in the specific sectors that make up the S&P 500. And once I know that, now I can start to formulate. The other thing that I can control is my asset allocation. So first thing, control temperament. How do I do that? How have humans behaved in the past? What does history have to say about it? And the second thing we do is once we have those probabilities and understanding of how humans have behaved, now we can formulate that asset allocation, which is just a fancy way of saying this is how much of your money's in stocks, bonds, and cash. And that drives 94% of the variability of your performance. So the good news is, folks, if you have control over the temperament, you can then control the allocation. And those are the two most important things that drive performance consistently over time. Now, getting back to the news here at the beginning of today, or at least the beginning of this podcast, like literally we're setting this show up, and this news gets dropped on everybody. Here we go. This is a CNBC article. Federal antitrust enforcement and 16 attorney generals also say that Apple's anti-competitive practices extend beyond the iPhone and Apple Watch businesses, citing Apple's advertising business, their browsing business, FaceTime, and news offerings. And here we go. Quote, each step in Apple's course of conduct built and reinforced the moat around its smartphone monopoly. The complaint filed in the District of New Jersey said Apple shares fell over 2% during today's trading, which is what we're seeing here right now. How in the hell? First of all, Apple's been sued many times, tried to by the Department of Justice in those states for their quote-unquote monopoly practices. And they talk about a moat of safety here, right? That's what this article is pointing to. So I don't think a lot of people understand what that really means. So just think about, like if you had a castle back in the 1300s or something like that. You're over there in Great Britain, and you got Vikings that are coming onto your shores and ready to plunder all your stuff.
Lannisters.
Right? Exactly.
Yeah.
A lot of good shows. We won't talk about the shows today.
No, I'm not trying to derail us.
Because I can definitely go down that rabbit hole. Love them.
We'd probably rather than what we have to talk about right now.
No joke. But if you own that castle, let's say, and that entire community, all those people were there, you generally felt a lot safer if that moat was as wide as possible, right? Making it more difficult to come across.
Right.
And you would also feel safer if you had additional, quote, moats of safety, meaning not only a wide moat, but also tall walls, maybe other resources that you can use to defend yourself and other resources to feed yourselves, right? Just in case they happen to surround, the entire perimeter. That's what they talk about. That's what a moat means. So a business can build a moat by having more than one stream of income is really what it comes down to. And Apple's been able to do that. You can point to Amazon with their AWS. They obviously have a massive retail platform. They're into finance. I mean, they're into all kinds of stuff. Every one of those, let's call it a segment of Apple's business, is a different revenue stream. And why that is important is Apple's not depending on one thing to get them through a quarter or a year. So their share price suffers less compared to a company like Zoom, as an example. I'm not picking on Zoom. I just use it today. I'm probably going to use it another 3 times today before today is over with. It's a great piece of technology. But the fact of the matter is Zoom makes money one way.
Yeah.
Right. That's it. Right. When you got Apple, Amazon, all these other companies, they make money in all kinds of different ways. And that's why they call them the Magnificent Seven when everything else seems to fall. A lot of investors go back to, well, where's the places I can put my money, regardless of the geopolitical environment, whatever risk you want to associate with what we're dealing with. Those revenue streams are predictable, right? They're reliable. They're coming in from different areas. They're not interest rate sensitive or any one thing that's kind of going to pull them down. And that's how you build a good business.
Right.
And by the way, Apple's made some stuff that has changed the lives of individuals, made it better, made businesses more efficient, employees more productive, students across all campuses benefiting from their products. I mean, I can go on and on. Healthcare, I mean, literally in every sector of the S&P 500, Apple, and not just Apple, but other technology companies, are doing business across every sector. They're truly changing the way that we search things, the way that we advertise things. I mean, none of this stuff is bad. None of it has actually hindered human beings from being more productive, living a better life. And can you say they have a monopoly? Freaking no. And that's the reason why the Department of Justice and all these other lawsuits that Apple has faced generally go in Apple's favor, because last I checked, they're still selling Androids.
Yeah. And the Google phone, which, I mean, I'm not saying it's any good, but like,
it's out there.
It's out there.
Yeah.
You have the option to go buy that.
Right. What are you going to do? You're going to sue Tesla? Why the hell didn't we sue Tesla for all those years when they owned the whole damn EV market?
Yeah.
That didn't happen.
No. I mean, and you would maybe think even a company like Amazon would be more of a target for a monopoly, considering how they've dominated logistics, right? And they've kind of, maybe taken revenue out of the USPS, forced UPS. And, I mean, when's the last time you saw a DHL carrier? I mean, especially now at Amazon, they have their own fleet. So you would think maybe there'd be some, I just don't understand it. I don't understand.
My point is, who's next? Is Uber next? Right? They got Lyft. Lyft is in existence. They have a pulse as a company.
Yeah.
Right?
Or a taxi. When's the last time you got a taxi?
I mean, this is unbelievable. And not just the stupidity of suing a company for doing a great job. Basically, America's like, hey, our doors are open. Bring everybody in here. We want the talent. Mm-hmm. We want to give you a potentially a better quality of life, more options, right?
Right.
Up until a point. When you get too good, that's a problem. And it's, to your point, it's taking money out of other people's pockets, and all those other people are businesses, and they're bitching.
Yep.
Right? They got, what do they call them? Lobbyists. Right? That are going at, and then it's the other thing too, you got maybe certain political reasons why this lawsuit is in existence. But how dumb could this possibly be, not just from a humanity perspective, right? Apple's done a lot of great things. I'm not saying that all publicly traded companies that are as big as Apple are perfect and they haven't stepped on some toes maybe.
Yeah, I mean, and Apple's not immune from criticisms either.
Right. And I'm not saying that they shouldn't be criticized.
Yeah.
But to sue them for monopoly practices, to me, is unrealistic. They're not going to win. And I don't see how they win politically either, because the people that buy this stuff, I mean, a huge percentage of that is a younger population of voters.
Yeah.
That love Apple products. So I can't see in any way, shape, or form how this is good for our economy, how it's good for this country. And I sure as hell can't understand the political rationale behind this decision during an election year.
Yeah, I can't either. And I understand, the government is supposed to be able to chew gum and walk at the same time, but there's other flavors of gum I wish they were chewing right now to try to tackle, as opposed to going after Apple and maybe what's just more of a frivolous goose chase. I wish that they were directing their time at other stuff. So
yeah. I mean, here's what Apple had to say about the news. The challenge represents a significant risk to Apple's walled garden business model. The company says that complying with regulation costs the company money, could prevent it from introducing new products or services, and could hurt consumer demand. The lawsuit threatens who we are and the principles that set Apple products apart in fiercely competitive markets. If successful, it would hinder our ability to create the kind of technology people expect from Apple, where hardware, software, and services intersect. An Apple spokeswoman told CNBC. It would also set a dangerous precedent, empowering government to take a heavy hand in designing people's technology. Who in the hell wants the government telling any of these technology companies what they should or shouldn't be doing with their products, services, and ideas? There should be regulations, right? We can't break the law. You can't do nefarious things. But as far as creating products and services that, as Apple points out here, kind of intersect every part of our life as individuals, households, and businesses, that's just unacceptable, man. Like, why have the type of entrepreneurial economy that we do? Like I said, to a point, you can dominate. To a point, which is unbelievable in this country. We should be like cheering this on. I understand the first antitrust legislation going back to Rockefeller days.
Yeah.
The guy owned every damn oil field in this country, right? I get that. If Apple sold every smartphone around the world, you would have my attention. That's not what happened here, right? Rockefeller did. And I get how you have to break that up.
Yeah. One person can't.
Literally choked out the entire market, right? Unbelievable wealth that was created from that. So it's not like the Rockefellers are hurting by any means, even still to this day, decades later. But that was your example of what true monopoly and the reason why antitrust law was created had everything to do with Rockefeller's company, Standard Oil, right? It got broke up into multiple different oil companies as we know them today. That makes total sense to me. But all this other stuff regarding Apple, you mentioned Amazon. I mean, hell, we can go way back in the waybacks here. Like, why didn't Walmart? Sam Walton created Walmart. Yeah. He didn't get any antitrust issues that I'm aware of.
I mean, how many small businesses have been ruined by a Walmart showing up in a town? You'd think something like that would have a little more of a attention from the government.
Yeah. Why don't we just take it a step farther here? The New England Patriots, they won too many Super Bowls.
Yeah.
What about the Los Angeles Dodgers this year trying to buy a World Series, $1.2 billion on new talent?
Yeah.
The Reds spent $100 million. We think that's like unbelievable money that the Reds spent, but they're not suing anybody.
Well, the example we were kicking around in the office before we went live, Nirvana. Let's sue them because of how awesome they are. You sold too many records.
Yeah, Taylor Swift.
Sorry.
Department of Justice gonna get on the phone with your agent today.
Beyonce, Lemonade Rock, too many heads. We gotta sue you.
I mean, we can go on and on here, folks. This shouldn't be news. I get that there should be checks and balances, but there's nobody that can convince me. And I think that the Department of Justice and all these attorney generals are going to have a very difficult time making a case that they are trying to make here.
Yeah, I agree. And, you need to have, like you mentioned, checks and balances, regulations, but there's also responsibility that comes with the people that are supposed to be the watchdogs and file those lawsuits, that if you make them more frivolous, it takes the bite out of them. You know, I mean, there's a responsibility to wielding those as well that I don't really see as being checked here.
Yeah, that's the sad part of it, is who's checking the people that are supposed to be doing the checks and balances, right? Well, I guess you could say the American population, because we do get to vote, but you know, that only happens every few years. So I don't know. We live in an imperfect world, and that's just part of it. That's not the real issue here. Is I truly cannot understand why this country was built on some principles. One of those principles is we will create a free economy, and if you want to take risk and go for it, you have our blessing. And there's a lot of tax benefits and a lot of other reasons why you might want to take that risk.
Mm-hmm.
And if it blows up in your face, then there's some, you have the ability to regroup and put all those chips back on the table again. Right. There's a lot of good things that go about, you know, entrepreneurship, but we're basically saying here with this, you know, attempt at breaking up Apple and labeling them as a true monopoly, way too far. Like it's to your point, the watchdogs, like, what is it that Apple has done that's actually hurt a human being or a company? Company-wise, maybe your product is inferior, so therefore your sales suffer. Well, that's actually true for every business, right? Your product or service, you have competition, right? And if your product or service isn't as good, or your service, or maybe your product is great, but your service is terrible, consumers get to choose. Apple's made products and provided services that are hands down better than the competition. How are you going to discipline them for doing such a great job?
Right. And in certain instances, they even invented a market. Right?
Yeah.
I mean, they didn't invent an MP3 player, but they portable MP3 players for home use. I mean, it's one of those situations like the word Coke, or put on your Nikes, or let's get a Coke. You're not even really talking about that brand when you say, hey, where's your iPad or your iPod? Remember, it's like it became so synonymous with that innovative tech and that kind of new market that it just, that's what you call it.
Why aren't we?
I don't understand it. And like you said, it's not like they're dominating one specific sector. They just have tech innovations that are regarded around home use. And that's the thing that keeps me coming back to Apple versus other like PCs, which is the marriage of the hardware and the software, where you don't have to have so many different apps and so many different accounts. And it works too, for me. I know other people don't have that experience in different industries, but.
Right. I mean, that's exactly what the best companies on the planet, they marry the two things.
Yeah. And make it efficient for you.
Extremely efficient. That's what NVIDIA's entire Investor Day conference was all about yesterday. It's like, yeah, we make these chips, but we're making new chips. We're making them better. That way, everything, no matter where you're at, AWS, Azure, HP, it doesn't matter. You can use our stuff and integrate it with everything across the entire space of software and hardware.
Yeah. I mean, that sentiment is becoming the thing in a lot of different industries, you know, not to sound like something out of left field, but you think about even like video games. The whole idea now is called crossplay, which is it doesn't matter if you're on an Xbox, a PlayStation, a computer, you can get on and play a game with your friends. You know, and you're seeing that, like you just said, even under like inside of the hardware or in the software, that's what people are understanding is make things more connected, and the actual device becomes irrelevant, you know?
Yeah. And those that want to just do one thing, product service wise, you better be the best in the world at it.
Right.
Because truthfully, that's your only moat. Like it's your own fault, CEO in corporate America, if you have resources and you haven't been able to deploy them effectively to figure out a way to generate other streams of income, whether it's within your own skill set, right? And you spin off and do something vertically integrated in the same space. Like Google's the easiest example, I think, for everybody to understand here. They're great at search, right? They dominate the whole search place. What can I make this better? Oh, I could sell ads. That's easy because I got so many eyeballs on this thing, just like Facebook has a bunch of eyeballs, so they can sell ads. That's one reason.
Right.
But if I'm going to sell ads, it'd be a lot more profitable and more efficient for Google and all their advertisers and the customers on their search engine if I can create technology to put a product or service in front of somebody that they didn't even know that they wanted to add on to whatever it was that they were already, on their site to look for anyway.
Yeah.
Why is that a bad thing? It's not. It's making things more convenient, better, more effective for everybody involved, the consumer, Google itself, and all the marketers that are spending money with them, right? It's not their fault that they just happen to be great at all of these different things, and they try to figure out other ways to make it better, more convenient, better service, better product, faster, more integrated with everything else. There's nothing about that is an issue in my mind, or should be for anybody in this country, because we are, the nation's largest economy, and how we got that way is through entrepreneurship, people taking risk, finding some success, and then adapting to other things that make them more and more successful, so they can be around for hundreds of years and be relevant, right? That's the goal, right? It doesn't always work out beautifully. Some companies go bankrupt, other companies buy other companies for various different reasons. There's a lot at play as it relates to being an entrepreneur here, but to go out of your way as the people that are supposed to be doing the checks and balances here in this country, to kind of drag the name through the mud a little bit, I don't think it's going to stick to Apple at all, right? They're going to let that mud dry and then just brush it right the hell off and move on about their day.
Hit the drive-through car wash. And it makes me wonder if there's actually some news that's going to come out, with something that we don't know about, that they drew this target on themselves. But otherwise, like you said, I can't understand it.
Yeah, it would have to be something, I don't know, like
not in a monopoly, like some other thing they did.
Some other nefarious thing.
Yeah. Which, there's reports out there about how Apple, it doesn't matter. That's not what we're talking about. This is specifically for the DOJ's case, but.
Yeah. Unless they come out and hit everybody with some news that nobody knew about as it relates to Apple's business. But if they're just going to say, you guys are selling too many laptops, iPhones, earbuds, subscriptions, that's not going to fly. That's not what the antitrust rules were created for. And I think a lot of people are abusing the rules that were actually in place there. So we will see what happens. In other news, yesterday was Fed Day.
My favorite day.
And nothing happened as expected.
Yeah.
Federal Reserve held the range of interest rates between 5.25% to 5.5%. It's been there since July of 2023. But what the good news was, and I'm going to read a little bit of this from the CNBC article, is Fed officials penciled in, quote, 3/4 point cuts by the end of 2024. So that was the risk coming into the Fed meeting, really. Nobody expected interest rates to go up or down in yesterday's meeting. But the question was, we started out the year in January 1st with almost 7 interest rate cuts built into the market, right? It was like 6.8 or something like that, which would imply 7 25 basis point cuts in 1 year, 2024. That's what January 1st was priced into the market.
Okay.
Now we're pricing in 3 rate cuts less than 3 months later. This is the primary reason here at Shepherd Wealth Management. We talk about asset allocation being such an important driver of performance over time. We started out the year great. We did anticipate, the tailwinds from last October spilling into the beginning parts of this year. We laid out all the historical reasons why that was, and expecting really good earnings seasons to come through, and it did. So we got off to a great start in the year. We raised a lot of cash towards the beginning of February for our customers, as much as 50% for some accounts. And we've basically been able to keep up with the S&P's performance so far this year, where we're waiting for yesterday's press conference at 2:30 when Jerome Powell took the mic and gave a statement and answered questions. We're waiting for that because if you start out January 1 with 7 rate cuts priced in the market, and less than 3 months later we have 3 rate cuts priced in, I would expect a ton of volatility, right? If you're looking for 7 cuts, you're only going to get 3, you would expect, markets mispriced securities based on that information. Therefore, they're looking at the market as overvalued and would want to sell shares. I was anticipating that by raising that cash so I can go in and buy those same securities that I'm a big fan of, knowing that the rest of the year should play out pretty nicely from an earnings, unemployment, and a eventually getting to interest rate cuts, which is great for all sectors of the market in general. That was the game plan. Now, we're thankful that we were able to keep up with the S&P 500 performance while we were sitting on that much cash, right? Because if the S&P is the benchmark, well, there is no cash in the S&P. It's 100% stock exposure. So if you're able to get market performance with 50% cash, you could look at it like this. Well, I got market performance with half the risk, right? Because half of that money wasn't subject to stock volatility. So that's why we did it, is because of that mispricing of interest rate cuts. Mm-hmm. We were counting on 4 this year, so we're not that far off as far as how we were looking at the data and projecting out what would likely happen for the economy and therefore affecting how our customers' performance would look like. So we're pretty accurate on that. I still feel like we're going to get 4 and not 3. I'll take the over on that for all those that watch the show. You can leave your comments, and maybe you feel differently. Maybe you feel like we're going to get more than 4. I don't know. I'd love to hear your opinion, though, and I could share the data with everybody during our next quarterly review. But that was the most important thing that I was paying attention to, is we knew for sure interest rates were going to be held steady. Yesterday's market close. But what was important is the Fed officials penciled in 3/4 point cuts by the end of 2024. Now, the current Fed funds level is at the highest it's been in 23 years, right? So that's why I think the Fed is leaning more towards cutting than hiking. And to be clear, I think that the Fed is in a dovish mode, even if they did 0 rate cuts this year. Now, I believe that we're going to get at least 4. I believe we're going to get at least 3. I think we're actually going to get a 4th cut, 25 basis points apiece. But even if the Fed did 0 cuts, like this is the conversation I had with myself a couple days ago before the Fed meeting. Even if we got no rate cuts this year and they held interest rates at the same level this entire year, to me, that's still dovish, because that just would go back and point to the major strength of the economy. Right. The only reason why they wouldn't cut rates at all this year, even though it's the highest we've been in 23 years, and there's a big gap between where the Fed funds rate is at and what the actual inflation numbers, are showing, and you would expect interest rates to come down as a result of that. Even if it didn't happen for the whole year, as long as the unemployment rate stays right around 4, we're at 3.9 right now. As long as corporate earnings hold up well, we're still going to have a great year. Yeah. Right, overall. So the only thing in my mind that would make the Federal Reserve, quote, hawkish and have to rethink our entire strategy and thesis for this year from an investment perspective is if the Fed decided to hike rates. Now, if that became part of the conversation, and the only way that would happen is if we had an acceleration of inflation data, right? You could say, oh, we got that in January and February. Well, the reason why Fed Chair Jerome Powell and everybody else that works for him decided to hold rates steady and is still pricing in 3 rate cuts this year is because they understand the seasonality of the data that we get in January and February. We talked about this in prior podcasts. I wrote about it in multiple different newsletters and the blogs we send to clients every Friday. You guys can go to shepherdwm.com and check out either the videos or the weekly blogs or newsletters. If a corporation is going to increase prices, they generally do it in January. And some people or some companies don't do that by the time the government collects all this data. So you see a trickling effect that happens with increase in prices. It's going to show up in inflation. It showed up in January. It trickled into February. We accurately assessed all of that. We talked about it multiple times. The Fed addressed it yesterday. Fed Powell himself said there's seasonality in that data in January and February. We still believe we're on this sustainable track towards 2%. We just want to feel a little bit more confident before we start to cut rates. And confidence for them specifically means, we would love to see CPI and, more importantly, the core PCE number, their favorite measure of inflation, to continue to show lower and lower reads month over month and year over year. That's obviously what they're looking for. And the more that we see of that, the more confidence that they will have, and therefore the faster that we'll see our first rate cut. But they just don't want to see the data spike. Even if the data kind of held right around where it is and it took a little while for it to trickle down, I think the Fed would be fine with that. And as long as the job market is strong, you wouldn't see a rate cut under those environments. So to me, the only thing that really would have changed our thesis for the year, expecting double-digit performance and a strong economy, is if something were to happen with the labor market or a significant increase in the inflation data that we do receive. A couple other important points here from yesterday's press conference with Jerome Powell. Future markets following the meeting were pricing in nearly 75% probability that the first cut comes in June. I've always been calling for May, and I still think that there's a chance of that. I think the probability dropped though from in the 30s to something like 9%. I guess at this particular moment in time, we do get some additional inflation and jobs data between now and May, so it is still possible that we see a cut in May, but it's almost locked in, if you will, a rate cut in June. I think that as we approach May and June, there's really going to be a push-pull inside that Fed meetings as the people wanting to cut in May and others wanting to wait until June. We'll have to wait and see what happens there. But the good news is as from a GDP perspective, this is from the same CNBC article, officials accelerated their projections for GDP growth this year and now see the economy running at 2.1% annualized rate, up from 1.4 in December. The unemployment rate forecast moved slightly lower from the previous estimates to 4%. So all this is pointing to a strong economy, very good job labor market, which means people are employed, they have money to spend, they will spend it, which trickles right into corporate earnings. So when you get GDP raises, by the way, 2.1 is pretty much right where we want to be running. It is a consistent run rate that we can hold on to. Obviously, when we have accelerations above that, that's great, but it typically doesn't last all that long. So a 2+% GDP is fantastic with earnings holding up and everybody having a job that wants a job. I mean, this is textbook, really good economic environment for investors to be, a part of. And we're very excited to be investing the way that we are for our customers. But it's not just tech this year. So historically, from a market perspective, as interest rates come down, things like technology tend to do very, very well. But we're going to be overweighting small caps. It's not a sector of the S&P, but it is an asset class that investors can participate in. We expect to be overweight small caps. We expect to be overweight home builders. It's kind of like an interest rate play. We'll also be overweight industrials with all the money that's being spent on chip factories. We just got news yesterday that Intel got an $8.5 billion grant to build out chip factories.
Yeah.
We're going to own some copper. FCX is the ticker symbol we like there, Freeport. And you guys can do your own homework on that. It's not a recommendation for you. I only make recommendations for our customers here. But you guys can do your own homework on it. But as we build out these chip factories, as we change onshoring and supply chains, all that is going to require copper. Freeport happens to be the largest here in the United States and one of the, if not the largest in the world. The demand is going to be very high for that commodity, and it's not an easy thing to go extract. Good news is they're such a large company, been doing this for so long, for so well for their customers that they're kind of the go-to as relates for that specific material. Now, materials is only a 2.5% weighting in the S&P, and we're only going to own 2.5% of that specific position for customers that makes sense to own. In addition to that, I expect interest rates to fall, right, at some point in time this year. What would you want to own in that kind of environment? I like the liquidity of ETFs here, and I would buy the TLT, which is the iShares 20-year treasury. And the main reason to own it is not to get bond exposure, is as interest rate comes down, the value of those long-term bonds will go up, so we'll make money on the appreciation, of the ETF itself. So I want to be overweight that. Expecting interest rates to come down. And then you guys want to obviously stick with the big name tech stuff. To us makes a ton of sense, given their wide mode of safety in their business and the high demand for things like cybersecurity, artificial intelligence, and transportation, that being Uber. Technically, it's a transportation company, not a technology company, although it has both pieces of it, which, again, maybe the Department of Justice isn't going to like that in a couple of years, but we'll find out. So those are the individual stocks that we really like a lot. We'll overweight those for sure. But you guys also want to take a look at derivatives of the AI play. So something that I found that was extremely interesting. The stock is doing great this year, having another great day today. And wanted to share that with you guys. VRT, Veritiv Holdings Company. Maybe some of you have been in this. If you have, congratulations. You've got an 83.5% return year to date.
Yeah, way to go, y'all.
But essentially, this is a company, an AI derivative for NVIDIA, because as NVIDIA builds out more and more data centers, they are able to basically cool the servers, right? So they don't explode or catch fire or cause a significant problem. So that's something that we also look at as well, these AI derivative plays. And last but not least, if interest rates are expected to come down here in the United States, that's historically a pretty good play for international. And specifically, we decided not to just blanketly own international. We like country-specific ETFs, one being India, the other being Mexico. And I'll give you the quick rationale on that real fast. India is a place where I think Apple's the best example here for folks to wrap their mind around it. So Apple's major supply chain and producers are mostly in Asia, right? Well, Apple doesn't want to have the potential hangover of what the Chinese government can do for businesses that operate in their borders. So they're moving a lot of their production, manufacturing, and supply chain out of that market and into India. India obviously has a ton of people there, right? So it's not just Apple, it's a whole bunch of other multinational companies that are moving either some or all of their supply chain into India, building out these factories, these data centers, and all this other stuff, because they have a huge population, of course, and their economy isn't nearly as robust as Asia or Europe or America, of course. So it is what we would call an emerging market type of economy. But as interest rates come down here, it makes the cost of capital more attractive to borrow and invest in places like India to diversify their supply chain. So India is doing great from an economic perspective. Same could be said with Mexico. Obviously, we have a really close relationship with that country from a trade perspective. And a lot of companies, not just automotive, but in all sectors, are moving a lot of their supply chains over there as well. So that's another reason to look outside of the United States borders. As interest rates come down, it's generally a good thing for international investing. But we really like those specific countries due to the investments that corporations here in the United States are making for their specific supply chains. So that was everything that we got today, Ez. We've covered everything, soup to nuts, if you will.
That was all gas, no brakes.
Yeah. Two kind of main topics. Not sure why this is a thing with the Department of Justice, but here you go.
Yeah, we await more news, I guess, huh?
Yeah, I'll get back to you guys if there's some more significant things. I honestly, at the end of the day, don't think this is going to mean anything at all to Apple's business, and yeah, it'll cost them a little bit of money, but they won't even know it's gone.
Yeah,
to fight this thing. So I'm not too concerned about their business or their cash flow as it relates to this. And as everything has to do with the economy and inflation, I think Jerome Powell did a really good job. I can't believe I'm actually saying that.
Yeah.
But he didn't screw it up.
I thought for sure that they were just going to never tell us when a rate cut was coming, and we just see it all of a sudden. You know what I'm saying? But
yeah.
That they kind of specifically said 3 makes me think there's probably going to be 4.
Yeah.
And I was so surprised when I read this and I saw that.
I was pumped. We had our finger on the trigger, if you will, to start doing some trades yesterday. We're wrapping that up here today. I just want to get all the news before we made the decision, because it's impossible to get in that guy's mind.
Mm-hmm.
I've tried to do it before on a small scale and been burned. Thinking he's going to say one thing and he says something else. And market reaction to that was the opposite of what I thought it was going to be. But I got to say, to wrap this whole thing up, I am very surprised that when you start a year with 7 rate cuts, and now we're pricing in 3 without really any volatility to speak of.
Yeah.
Like we talked about this in the last podcast. Historically, every year, there's been on average 3-5% pullbacks in the S&P. We haven't gotten one.
Not yet.
And there was a bunch of reasons. I mean, that's the biggest reason why you would say, oh, yeah, the market mispriced in interest rate cuts, therefore there was at least a 5% sell-off. Like, I could easily eat that and handle it. I can't believe it hasn't happened. Now, it's going to happen at some point, whether it's just, the market's just taking a pause. We see a lot of that generally around the summertime because there's just less volume. People are traveling around doing their vacation thing. But I'm very surprised. That's why I was extremely cautious, even with all the good earnings, all the good employment data, et cetera. But with the mispricing of the rate cuts, would have generally caused a much bigger volatile moment for market participants. And we were prepared for that. But I guess we still win because we were still keeping pace performance-wise with the S&P. Had we been fully invested in the positions that we really like, we'd be crushing the S&P right now. I'd say by at least 2% year-to-date with a lot left in the year to go. But really what this is showing us from a research perspective is we did identify the right asset classes to want to overweight. And now that we have all the data that I think that we need, we got the pricing right, I think, for interest rate cuts. And if we happen to get a fourth, that's a good thing to be wrong about, right? I'd be happy to be wrong about that. But very thankful that we've been able to keep pace with all this cash. And now that we got the information I think that we really needed, the only thing that's left to do is see the inflation data continue to come in positively, meaning not higher than expected, either meeting expectations or coming in lower than anticipated. I don't think that you're going to see any destruction in the labor market, and I don't think that there's any way that we're going to see significant earnings recession. I think we had that last year. So because of all that, our thesis for the year still remains intact, still expecting double digits from the S&P by the end of the year. Our price target was probably too conservative as far as that goes. But we gave you guys kind of our take on Powell's conference, how we're applying that information from a historical perspective for our clients via their asset allocation. And we gave you guys our thoughts on some really weird news coming from the Department of Justice.
Yeah, out of nowhere, too. There was like no indication we were going to hear that.
Yeah, I don't know why somebody woke up today and was like Thursday the 21st of March, taking down Apple. We're going to start with them because they're the biggest player in the whole market space.
Yeah.
Good luck, man. What a waste of resources, tax dollar. I mean,
all of it. That's like I'm saying. Like, I wish there was something else at this moment that they were directing there. If this is all the info we get, other than the government being like, hey, nah, we don't like that. I wish there was something else they were doing with their time.
Yeah, well, I guess we all get to vote. So another reason to get out there and hit the polls.
Yep.
But other than that, guys, we'll keep giving this to you every couple of weeks. We'll see you again here after April 1st. And please enjoy March Madness as we kick that off. UK tonight, I think 7:30.
Right around there, 7:10, 7:30, yeah.
Yeah. So
whole slate of games starting here in about 15 minutes.
Yeah, so we got to go. We'll see you guys in a couple of weeks. Hope you have a great day.